Let's talk about how this week's trading played out. It's been a fascinating week, and of course we had the end of the financial year bang in the middle of it all. And to tell us more about who has been buying what and also who's been selling what, we're joined by Gemma Dale from nabtrade. Gemma, welcome back to Ausbiz.
Hey, how are you doing?
What an interesting week. Talk to us about the momentum. Are we seeing more enthusiasm for buying or selling? Because it's rather mixed. Even on a day like today, we're seeing the market shoot up and then lose all of that early momentum.
We've finally seen like a really dramatic shift in sentiment. We've been talking about it for a while. The biggest indicator for us of risk sentiment is how our cash book goes. So we've seen cash flooding into equities over the last 3 to 4 months, right? Investors have been absolutely loving seeing prices come off. They've been throwing money at it. They've done the exact opposite of what people fear retail investors will do. So they're very worried retail investors will panic when the market falls. Ours did the opposite. They were like, this is fantastic, great buying opportunity, throwing money at it. And yet the cash book kept rising, which meant that many of our investors felt that there were going to be more opportunities on the table. They do not put all their money to work straight away. So there was all this dry powder waiting for more opportunities, and the opportunities haven't presented themselves for many of them, right? The market's come back so quickly, and so we saw a lot of our investors go, I'm feeling less comfortable about this as a buying opportunity, and we've now seen the shift happen. So the two big things that have happened is that our higher value customers, so those who trade very actively or who just have very large portfolios, have pulled right back. So they have stopped putting their money to work, they're starting to sell, and we're seeing them drop as a proportion of overall trades. So we're now seeing smaller trades and smaller investors as a larger proportion of what's going on smaller volumes than we've seen over the last few weeks. The other thing is there has been a big shift to the sells. So yesterday Afterpay was suddenly a massive sell for the first time. Investors went, you know what, I've done so well, it's time to get out. The second most traded stock, and it was only very marginally behind Afterpay, was the Strong Bear hedge fund.
There we go. Contrarian indicators flashing everywhere. Speaking of what's been going on in the markets recently, a bit of speculation. Talk us about some of the small cap stocks. I've seen some amazing moves this week. Things that you've not really seen out of times, maybe outside the GFC period, and before that, probably the tech boom back at the turn of the millennium. What's been happening?
So we've seen exactly that, and it was really yesterday that it became really apparent in our data. So in our data, it's very obvious the big moves in the big stocks. You don't see a lot of the small stuff coming through. So we saw big sales in the banks, for example. We saw this real shift away from, it was really profit taking right across the board. And then suddenly this massive rise in these small caps has been amazing. Very small trade sizes. So the critical thing is they're very small trade sizes and they're quick, they're in and out. So it's not necessarily all buying. There's been a lot of active trading. So we saw Alterity Therapeutics. We have seen Osteopore, which everyone's been hearing about. We saw EtherStack, that was a couple of days ago, right up, right back down again. Dorsa V was in there. So we've seen this kind of astonishing range, and these were all in the top 10. So to see names, frankly, that many people have never heard of, all in the top 10, very actively traded, 800% moves in a day, that sort of stuff. It's been quite fascinating. My suspicion would be next week they'll all be gone again. But people had a lovely time while it was running.
Bit of churn. No one's been hurt by a bit of churn.
On that note, how are volumes more generally speaking across the market? Are we seeing the market move on pretty light volumes, or obviously with the smaller names it's probably heavily driven by a small patch of investors?
That's exactly right. So it's a small number of people trading very actively in those sorts of companies. At the larger end, there is some trading, it's mostly getting out or putting money to the side, investors sort of feeling it's time to take some profits. Volumes are down, they really are. It's certainly not down the way we saw in January and February when investors were like, this is way too toppy for me, I just want to sit back, particularly when the news about COVID was starting to increase. But it's nothing like we saw in March and April when volumes were absolutely enormous and people were just aggressively trying to get in as quickly as they could. So it's quite quiet relative to recent periods.
Okay. Gemma, you've got a lot of these contrarian indicators out at the moment. One that struck my eye when I was reading the notes here earlier today was what happened with Commonwealth Bank yesterday. Now, Commonwealth Bank just had a good day yesterday, very strong day, but nabtrade clients weren't so enthusiastic about it, I believe.
Nope, sold really heavily. So we saw an 86% sell on CBA yesterday, over $70. Plenty of our investors were buying in at sort of low 50s. Really love that. I mean, that's a great jump for them. They're up, 40, 50% in many cases. They've had a lovely time. They're going to take some profits on that. A lot of them, so financials are a huge proportion of our book, as you can imagine. Retail investors love them. They obviously have enjoyed the dividends over many years. The price performance has been very poor over 5 years, very, very poor for most investors, but they were getting in at low prices, so they've topped up their portfolio. Quite a few of them see some headwinds and just go, you know what, I've done well, I'll just take a bit off the table. We wouldn't see wholesale selling that would impact their overall holdings dramatically. It'll be just taking some profits.
Okay.
Gemma, obviously we would have seen some profit taking this week with the financial year and probably influencing a few portfolio decisions, but how about overseas? In the US, do we see similar profit taking moves?
Yeah, so this was really interesting as well. Usually when we look to international markets, it's straight buying because most of our investors have not bought internationally directly before. They'll have held ETFs. They will have tried to get international exposure, but still really small proportion of their portfolio overall. So when they go overseas, it's generally buys and they're not anywhere near as active in their trading as they would be in Australia. We have seen some real selling this week. Okay. Tesla, I've been telling you guys for weeks, months in fact.
We can't get enough of Tesla hearing about its ups and downs.
They've been so mad about it for such a long time. $1,200, they're out. So it's been really interesting to see a shift to the sells on that one. But also Amazon, Microsoft, they're selling on those too. So the Nasdaq's making record highs and a lot of our investors are looking at some of the data out of the US and going, it's been great. It might be time for me to take some profits on that front as well. So as I said, cash book is growing. People are starting to take a little bit of money off the table.
Gemma Dale from nabtrade, thank you so much for joining us once again in the studio.
Have
a wonderful weekend, and I look forward to doing it all again next week.
Thank you.
Take care.